The CSE said yesterday that the market has seen many advances on various fronts, indicating a noteworthy turnaround. Speaking first at 9 today, the chairman of the CSE added that low interest rates are driving investors into the market, while foreign investors who exited emerging markets are also now returning.
The Colombo stock market said it recorded a noteworthy turnaround in the recent months since it reopened in May after a prolonged closure driven by the COVID-19 pandemic. It noted that the market reported progress in many fronts, with some being the S&P SL20 index recording a 21.15% gain since market reopened, and the year-to-date daily average turnover being the highest since 2014 with 1.35 billion rupees. To get an understanding into the reasons behind the progress, First at 9 spoke to Chairman of the Colombo Stock Exchange, Dumith Fernando.
What we have had so far since the bottom of the market, we've had the market go up about almost 30%. Also, since the shutdown of the market in March 20th, the markets are up a little over 20%. What is important to understand is that the market still is one of the cheapest markets around the region. So it's trading at a slight discount to book value. And why do we feel that this is undeserved and that there is more upside in the market? Of course, we all know that Sri Lanka has been one of the countries with best management of the COVID-19 situation. With that, we are also seeing the bounce back of the economy. So most areas of the economy, the tourism sector is doing extremely well. It has bounced back quite well, and so we expect good corporate earnings over the next few quarters. On top of that, we have seen interest rates going down very significantly over the last few months. So if you look at the approximate one-year deposit rate at the bank for a fixed deposit now, you're getting roughly about 5 or 5.5%. This barely beats inflation, so your real return actually could be negative on that. So equity markets with dividend yields of about 3%, as well as the valuation upside, given that the starting valuations have been low, have been a destination for a lot of savvy investors to come and generate better returns this year. With that, we've seen the market volumes more than double what it was last year. We've also seen that there are a very large number of new investors who've been coming into the market, and now we're starting to see the foreign investors who exited the market, as they did with all frontier and emerging markets, are starting to get beyond the buying side as well. So I do believe that there is still a positive outlook for equity markets, and this could be a fairly good investment return that one could expect by participating now.